Hi, Howard Dal Monte with Clarity Wealth Management. Hey, I wanted to talk to you about the Federal Reserve interest rate cut. So just yesterday they announced that they're cutting rates by 0.5%. And when I think about how this is going to impact you, whether you're a person or you're a business, there's 4 categories it's going to impact. Your deposits, your checking and your savings, your investments, the stuff you have with me, credits like credit cards, and loans. And so on the loans, everything just became cheaper for you. So this is a great thing. And number 2, the big impact that this really has is you see when rates are high, banks don't want to lend any money and the economy is really tight. And you might lose your job. So for example, in 2008, when rates were at their peak, my boss Paula came to the Bank of America right behind us, and she fired everyone who worked in my division. So the thing is, you're getting fired at this time, there's no money available, wages get really low. So that when rates are high, that's the worst thing ever. So now that they're cutting rates, we're moving towards a better cycle. A lot of times in your life, you might notice that you feel better financially, you have more money available, your job is paying better. That's typically when rates are really, really low that you feel that way. So the thing is, low rates are good, high rates are bad. If you notice in your portfolio, recently I placed several stock trades. All I'm trying to do is make you money in your portfolio. So I'm going to put you where I think fits in your portfolio, but we can also make some money based off these interest rate changes. We're always planning what's happening in the economy. But this is an important thing because there's stuff that you got to think about that you have to do yourself. Because I take care of the stocks for you. But there's stuff like your house out there. Maybe you have a 5.5% or 6% rate on your mortgage. Over the next year, you're going to get a good chance to refinance that. The Fed's probably going to cut rates by another 0.75 percentage points. And so if you have a $400,000 mortgage, you might save a lot of money. Maybe you get to a point where you save $500 or $1,000 a month on refinancing your house. So you got to pay attention to that. The next year is going to be your opportunity to put some more money in your pocket. If you need a car, interest rates will go down on those cars. If you're a client who has a CD and you don't want to watch it every time it matures, pay you less interest, because that's what's going to happen if you have short-term CDs, is they're going to mature at lower rates. But if you take a longer term, like 2 or 3 years, you get a higher rate. So those are the kind of things you need to think about. I hope you guys enjoyed today's video. If you have any questions or you'd love to meet with us for any reason, feel free to call me. Thank you so much for your time. Bye.